Hello everyone and welcome to this Melbourne Business Network presentation on keeping ahead in uncertain times. This covers the economic measures put in place to reduce the financial effects of COVID-19. My name is Brian Jones and I'm from Ahead for Business, and we are members of the Melbourne Business Network. Now, just to give you an overview of today's presentation, it covers the economic stimulus and support measures of the state and federal governments. And these include JobKeeper Relief, decisions that have to be made with JobKeeper Relief, federal tax relief, which is really quite generous, followed by the Mandatory Code of Conduct for Commercial Rent. That's for issues between tenants and landlords, and the economic support measures of the Victorian state government. Now, I suspect that most of you will have seen this kind of disclaimer before. This disclaimer is necessary because this presentation can only be general in nature, and there are very specific tailored options for individuals. So this disclaimer is very necessary. You can't rely purely on this presentation. You must seek advice from your advisor or perhaps a government department. So, launching straight in with JobKeeper Relief. What is JobKeeper Relief? Well, it's a wage subsidy for businesses who are eligible businesses, and the whole process is administered by the Australian Taxation Office. It's $1,500 per fortnight per eligible employee or one eligible business participant. And a little later on, we will have a look at business participants. And they must be earning $1,500 per fortnight. So whether they're an employee or a business participant, it must be $1,500 per fortnight. And it's to be paid up to a maximum of 6 months from the 30th of March 2020 to the 27th of September. Now, JobKeeper Relief relates to two classes of recipient. There's businesses with employees and businesses without employees. So first of all, we'll look at businesses with employees. This is for businesses with an aggregated turnover of 1 billion or less, and estimated GST inclusive turnover must have fallen or is likely to fall by 30% or more. For businesses with an aggregated turnover of more than 1 billion, the estimated turnover must fall by 50% or more. But like many economic measures put forward by the government, there are always exceptions and always changes to the rules. So certain employers are excluded from receiving JobKeeper Relief. There are many of these, but an example could be a company in liquidation for obvious reasons. Also, Australian charities and not-for-profit commission entities are eligible if the turnover falls by just 15%. So the great concession there for charities and not-for-profit organisations. Universities and non-government schools remain subject to either the 30% test or the 50% test, so they are no different from any other taxpayer. Sole traders with eligible employees can also claim for their employees. Now, a key issue in JobKeeper Relief, that's the turnover decline test. This says that projected GST inclusive turnover must have fallen by 30% or 50%, as the case may be, in either a month or a quarter compared to the same period in 2019. For the purposes of what is trading turnover, it's the GST definition of trading turnover, and it does not include such items as interest, rental income, and other types of income. This is called the modified projected GST turnover. It's self-assessed, it's part of self-assessment, but of course can be looked at a later stage. For the purposes of turnover, it's the aggregate turnover of the entity with its connected or affiliate entities. This is called the definition for small business entity. Broadly, annual turnover of an entity is income derived in the ordinary course of business. So it's quite logical what that would be to many organisations. And it excludes dealings between an entity and its connected entities and affiliates. Now, the turnover decline test. Well, the immediate test is a comparison to the same period in 2019, whether that be a month or a quarter. But a large number of other turnover decline tests have been subsequently announced. And these in particular relate to businesses that have only been in existence for up to 12 months. There is now a test which allows a comparison within that 1 year. So there's for 12 months, 6 months and 3 months. There's also various provisions for businesses that have been affected by drought or natural disaster, such as bushfires, presumably, and businesses that have irregular turnover. There's also provisions for sole traders and small partnerships which have had sickness, injury or leave problems during the previous 12 months. Some further information on the eligibility for JobKeeper Relief. Eligible employees must elect to participate in the scheme. An employer cannot claim JobKeeper Relief if this election is not sought from the eligible employee. The reason at first instance may seem a bit strange, but in actual fact it's because some employees can have multiple jobs, and also some employees could actually be in a position to claim JobKeeper Relief as a business participant. They must also confirm they were employed at the 1st of March 2020, and this also includes employees who were stood down or rehired. If they've been stood down without pay, JobKeeper Relief does not apply. The single touch payroll system, which was introduced in 2018 for many small businesses, can be used by the ATO to pre-populate these details. So the ATO have a substantial amount of information already for those who could be eligible for JobKeeper Relief. And eligible employees must continue to provide details on a monthly basis. Now some more information on eligible employees. All eligible employees are to be included. That means that all those that have not informed the employer that they do not wish the employer to make a claim. It's called the JobKeeper nomination notice. They must be currently employed, even if they've been stood down or rehired. And they must have been employed at the 1st of March 2020. They can be full-time, part-time, or long-term casual, which means they've been working for over 12 months. There are some issues with shorter-term casual employees, some of which have been addressed by the government, but a large number of short-term employees are not actually included in JobKeeper Relief. At least 16 years of age on the 1st of March 2020, and they must be a resident of Australia, which is classified as for social security purposes, and an Australian permanent resident or holder of a special category visa. And some more details on the eligibility for JobKeeper Relief. Employees must not have given another employee a nomination notice. JobKeeper Relief can only be claimed once at one employer. Long-term casuals who must not be employees of another employer. And an employee must not be in receipt of a government-funded parental leave pay or dad and partner pay, and must not be fully supported by workers' compensation. The 1,500 threshold. This is a payment of $1,500 per fortnight for the duration of the scheme for each eligible employee and runs till the end of September 2020. Eligible employees receiving at least $1,500 gross per fortnight since the 30th of March 2020 will qualify. Effectively, this means that JobKeeper Relief subsidises the first $1,500 of a wage. There will be minimum payments for the first 2 fortnights by the end of April 2020, then every fortnight thereafter. Employees earning less than $1,500 gross, that means before tax is deducted, per fortnight since the 30th of March, cannot get a wage subsidy. But if an employer pays an employee top-up payment to ensure employees earn $1,500 per fortnight, they can then claim the wage subsidy. It is not compulsory to pay super on the top-up payment, but I suspect that many employers will elect to pay the superannuation. And some further information on the threshold. An employee stood down without pay after the 1st of March 2020. In these cases, the employer must pay the employer minimum $1,500 per fortnight to get the wage subsidy, even though that employee has been stood down. An employee must have been in employment on the 1st of March 2020 and may have subsequently ceased employment, but could be re-engaged. The employee must be re-engaged with pay of $1,500 per fortnight to gain the JobKeeper Relief. And it must be also by the same employer for the wage subsidy to be paid. Now we move on to businesses without employees. These are called business participants, and they cover a number of different people in business. The first one is the sole trader. Sole traders will typically lodge their annual tax return and be assessed on taxable income. There's no PAYG withholding. Individual partners of a partnership will typically get a share of the partnership income once a year. There can be exceptions, but that's generally how it operates. Again, there's no PAYG withholding. Directors are shareholders of a company. A shareholder of a private company will probably only get a dividend once a year, unlike listed companies which give their shareholders dividends twice a year. And again, there's no PAYG withholding. An adult beneficiary of a trust, this is very important because literally hundreds of thousands of businesses in Australia are actually operated through trading trusts, and they're typically family operations. The beneficiaries get a distribution once a year, and they draw against this entitlement. Again, there's no PAYG withholding tax. So only one of these participants can actually be nominated for the JobKeeper Relief in each of these businesses. But the same turnover test, that's 30% and 50%, are applied to their circumstances. And further, with businesses without employees, a business must have an ABN before the 12th of March 2020. This is not really earth-shattering because no business could really realistically operate in Australia without an ABN. And they must have had an amount including assessable income in 2019, the 2019 income year, or they must have made a supply in the period the 1st of July 2018 to the 12th of March 2020. That means they must have lodged BAS statements. Now a summary of eligibility for businesses without employees. Firstly, they must be actively engaged in business at the 1st of March 2020. They must also not be entitled to another JobKeeper payment. That could be as another nominated eligible business participant or as an eligible employee. JobKeeper payments can only relate to one person once. They must also not be a permanent employee of another employer. This could be a situation where someone is permanently employed but has a business, perhaps a side business, perhaps a weekend business. They cannot claim to be a member of the JobKeeper scheme twice. They must be at least 16 years old, 1st of March 2020, and they must also be a resident of Australia for social security purposes. They must be a resident of Australia for tax purposes, and they can be a holder of a subclass 444 special category visa. And some key points relating to JobKeeper Relief. The first payments begin in early May 2020, but nominations for the first two fortnights in April, have been extended to 31st of May. Previously, this was they were due to close at the end of April, so there's a generous month there for people who are actually looking at JobKeeper Relief for the first time and who may not have their records in order to be able to make the tests necessary for turnover decline. Once a business has satisfied the decline in turnover test, there is no requirement to retest. Now, what this actually means is, if, for example, you can prove that your turnover has reduced by over 30%, for example, in April 2020 compared to April 2019, you do not have to retest that every month. You will actually get the payment right the way through to the end of September without any further retesting. An employer can apply for a subsidy if the downturn in turnover is reasonably expected. Now, that's a little bit of a grey statement, but in some industries it'd be really quite obvious. Those sort of industries are event management, cafe and restaurants, and perhaps the airline industry. If the turnover test is not met in March 2020, it does not preclude the business satisfying the turnover tests in a later month until September 2020. For example, if you don't pass the test in March 2020, you may find in May you pass the test and your turnover is clearly 30% or more down on 2019. But most importantly, the payments are not backdated. So once the nomination, or sometimes called the enrolment date, is met, the ATO will not go back and look at retrospective claims. They have to be claimed by the time deadline that's set by the ATO. All employees stood down must continue to be paid at least $1,500 per fortnight. So it's not possible to stand somebody down, pay them for a while, and then stop paying them and still claim the JobKeeper relief. It will not be available as soon as the stood down employee is not paid $1,500 per fortnight. Some more points on the JobKeeper Relief Scheme. Once an employer participates in the scheme, it must apply to all eligible employees. In other words, it can't be a selective process where some employees are selected for JobKeeper Relief and others are not, unless those employees have nominated not to take part in the scheme. JobKeeper payments are subject to income tax, and this is logical because JobKeeper Relief is actually a substitute for lost turnover as a result of our current predicament with COVID-19. PAYG withholding must still be deducted from payments to employees in the normal way. But businesses cannot get JobKeeper payments in respect of workers engaged through a labour hire firm. There are some provisions available which permit the labour hire firm to make the JobKeeper payment claim for those people. And a sole trader can qualify for JobKeeper Relief as an eligible business participant. Now, JobKeeper Relief involves a lot of decision making, and this is a summary of some of the decisions that have to be made. It's not a full summary. This is probably the most likely decisions that have to be made. For example, employees have to confirm agreement to JobKeeper Relief. They have to nominate. It's not sufficient for the employer to simply make the decision without reference to the employee. Standing down employees, this needs to be documented to substantiate it, and this means a letter, a stand down letter. There are often stand down directions to employees to work less hours, for example. Directions can also be levied on employees to perform different duties, but a key point here is that the base hourly rate of that employee cannot be reduced. And also directions can be given to employees to work at a location, which typically could be home, other than the usual location. One of the most important areas is the topping up provisions. This permits employees to be paid $1,500 per fortnight where they are currently earning less than $1,500 per fortnight. This means that the employer will literally top up the existing wage. So say the wage was $1,200, the employer could add $300 to that person's wages and then claim JobKeeper Relief on the minimum amount of $1,500. The top up is taxable. With withholding tax, there's no difference to any other form of wage payment, but it's not compulsory to pay super on the top up, although it is expected a lot of employers will pay super on the top up. And the top up will last for the period of JobKeeper scheme, which could be interesting at the end when the employee's salary effectively has to come down to where it was before. That might cause a few problems with some employers and employees. Topping down, which is not mentioned quite as often, can also occur. This happens where reducing wages down to a minimum of $1,500 per fortnight. So say somebody is on $2,000 a fortnight, the employer could reduce the wages to $1,500 a fortnight and still get JobKeeper Relief. Again, this is for the period of the length of the JobKeeper scheme, which is till the end of September 2020. The Fair Work Act 2009 already exists, which permits employers and employees to enter into agreements relating to ongoing employment. So legislation is in place already to vary employment arrangements for a period of time. And therefore, the employment arrangements can be modified during the JobKeeper scheme period. And now moving on to another form of relief available. This is federal tax relief. It's through the PAYG withholding system, and it is to provide very specific cash flow assistance for businesses. There are two categories to this. There are specific payments based on the amount of PAYG withheld from salary and wages, and then there's another category which is for wage subsidies paid to eligible employers who retain an apprentice or trainee, and this is, seems to be to ensure that apprentices and trainees are retained and not stood down. This applies to small to medium-sized businesses and not-for-profit entities with an aggregate turnover of less than 50 million. They must employ staff, and they can be eligible for a payment of up to 100,000. They must have been employees before the 12th of March 2020. The minimum payment available is 20,000, and eligibility is subject to what's called the specific integrity rule. Now, this rule says that the arrangements are not contrived to obtain this relief. There are two stages. The stage 1 payment is for eligible employers that pay wages and salaries, and they will receive a minimum of 10,000, even if they are not required to withhold PAYG tax. And that could happen, say, with salary sacrifice arrangements. And the amount is automatically credited by the ATO upon lodgement of activity statements, and it's actually credited to the integrated account. If that results in an amount due to the taxpayer, it will be refunded to the taxpayer. Now moving on to how this is paid. Quarterly lodgers, that's people lodging buses on a quarterly basis, will be eligible to receive a payment for the quarters ending March 2020 and June 2020. Monthly lodgers will be eligible to receive a payment for March, April, May and June 2020 lodgements. But the payment for March will be 3 times the actual amount withheld in that month. A minimum payment of 10,000 starts being applied to integrated accounts from the 28th of April 2020, and employees must be paid by the 30th of April to get relief, although this requirement has actually been extended to the 8th of May, allowing them to be paid through to the 8th of May. Now, to give an example of that, if the PAYG for March was, say, $2,000, then the 3 times amount would be 6,000. But the actual business would receive 10,000 rather than 6,000 in relief, because that is the minimum. So this really does favour small payroll businesses. The stage 2 payment is for employees that continue to be active, and additional payments will be made in June through to October 2020. Quarterly lodgers will get 50% of stage 1 payment for the quarters ending June 2020 and September 2020. So if they were on the minimum 10,000 in April 2020, they would actually receive 5,000 in June and 5,000 in September credit to their integrated account. Monthly lodgers are a little bit different. They will receive a quarter of the original payment in June, July, August and September. The second the category of PAYG withholding tax relief are wage subsidies for apprentices and trainees, and this applies to employers with less than 20 employees who retain apprentices or trainees, and they were in training as at the 1st of March 2020. They can be entitled to a wages subsidy equal to 50% of wages paid in the period 1st of January 2020 to the 30th of September 2020, so a 9-month period, but this is subject to a maximum of 21,000. Registration has already begun in April 2020, and final claims can be made by the 31st of December 2020. It's necessary for access to this subsidy to get an eligibility assessment by an Australian apprenticeship support network. And other initiatives in relation to federal tax relief, they include the instant asset write-off, which increases from 30,000 to 150,000. Originally, this write-off, which has been going for several years, started at 20,000, went up to 30,000, is now hiked up to 150,000 for turnovers less than 500 million, and that ends on the 30th of June 2020. But don't think you can go out and buy a luxury car up to 150,000 and get an instant write-off. There is a luxury car limit of just over 57,000, and the instant write-off will apply for business purposes only up to just over 57,000. Now something that's going to affect a large number of small businesses, and that's the mandatory code on commercial rent. This was derived by the National Cabinet, where they agreed that there should be a code between landlords and tenants, and to be legislated by each state and territory. Each state and territory is legislating with the mandatory code. Tenants with turnovers of less than 50 million and eligible for JobKeeper Relief, that means their turnovers declined by more than 30%, can take part in this mandatory code. But there are responsibilities on both sides, of the tenant side and the landlord side. For example, the tenants must honour leases. The tenants must qualify for JobKeeper Relief, and rent must be continued to be paid. This can be by mutual negotiation. The suggested method is a proportionate basis, which says if your turnover falls by, say, 30%, then the rent should fall by 30%. There's provision for rent waivers, techniques for rental deferral. There's a prohibition on lease termination, and there's freezes on rent. So there's a good area of negotiation available, but certain things must take part. For example, prohibition on tenants not trading or reducing hours. So this works both ways, both on landlords and tenants. No claims can be made on bank guarantees and security deposits, and that's a landlord responsibility. And also alternative negotiations, which can be binding, can be made through a mediation process. All states and territories have their responsibilities for various taxes and levies and licenses, and there's a pattern between them. So it's usually payroll tax, land tax, and liquor licenses that each state is responsible for. So in Victoria, payroll tax has been waived or reimbursed, or if already paid, for the 2019-2020 financial year. And this applies to payrolls which are under 3 million per annum, but they must continue to lodge returns. The first 3 months of 2020-21, which is actually July to October, is deferred for these businesses until the 1st of January 2021. No payroll tax actually applies on JobKeeper payments, which is understandable because JobKeeper payments are really a substitute for turnover. Land tax, well, there's a deferral where an entity has at least one non-residential property and total taxable land holdings below 1 million. It's possible to defer 2020 payments until after January the 1st, 2021. The full payment has to be made by the 31st of March 2021. So this is a deferral. It's not a complete waiver. It's a deferral. Then there's a land tax reduction. Landlords who provide rent relief to tenants impacted by COVID-19 may be eligible for a 25% reduction on a property's 2020 land tax. They can also defer land tax to the 31st of March 2021. Now, I suspect this means that they have tenants who pass the turnover decline test. That's the only way that could actually operate. Rent relief is under the mandatory code, as we've seen before, is legislated in every state and territory. In Victoria, there's a small business one-off grant of 10,000, which is available to businesses who employ staff if turnover is over 75,000 and payroll is less than 650,000. This is no coincidence. 75,000 is the threshold for GST registration, and 650,000 is actually the threshold when payroll tax starts. But they have to prove that they have been highly affected by the lockdown. And I would assume in many cases this is obvious, but there could be some grey areas around the edges. All liquor licenses are waived or reimbursed for 220 if already paid out. There's a wealth of information available on many websites, but I would suggest that going to the ATO's website under General COVID-19 is probably one of the better ones to look at information. Also, there's the State Revenue Office of Victoria for Victorian issues, and that's www.sro.vic.gov.au. In addition, there are templates available for things like stand-down letters. So there's a reference there to get a template for a stand-down letter. But if you do have questions, you can address them to the Melbourne Business Network, and we guarantee that we will answer those questions between 24 and 48 hours. And to access us, you can send your query to admin@melbournebusinessnetwork.org.au. Thank you for your attention during this presentation.